This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
Joined by Casey Boland now. Casey's with Hanghold Capital Management. And Casey, you go back and look over time. We hear that on average the stock market might average around 9 to 10% in a given year. And you look at three different 30-year periods, and what did you see?
Well, it's very interesting when you look at 30-year returns and you go back to 1926. You know, the worst 30-year return, obviously people would expect, well, that's going to involve the Great Depression,
Sure.
And it was an ugly period of time. But I think if you ask people about guesses of how the market performed during that 30 years, some may say negative or some say low returns, but believe it or not, stocks still return almost 8% per year over the ensuing 3 decades. It was a big hole to climb out of to get to that 8% point, but wow, I was surprised at the results.
Yeah. 30 years beyond that, 56 to 86, what happened?
Well, during that period of time, you had the Civil Rights Movement, the Vietnam War, a president was assassinated, another was forced to resign. You had the price shock for the OPEC embargo, double-digit inflation, interest rates, you had 6 recessions. During that period of time, those still stocks averaged 9.63%. So pretty good returns during that period of time.
No doubt about it. All right, 30 more, 86 to where we are today, 2016. What are we looking at?
Well, you had Black Monday in 87, the savings and loan crisis. You've had wars in Iraq and Afghanistan, 3 recessions, and one of a pretty horrific recession in recent years. But still, in that 30-year period of time, the market averaged around 10%. But even, we looked at 3 specific 30-year periods, adding up to 90. If you look at all these rolling 30-year periods over that long period of time, still, you can't find market periods of time that really much perform below 8%. So I know oftentimes we look and we see issues today, what's going on in the marketplace, but, we're not promised nothing in return as investors for the future. Still, it's hard when you look at these numbers and not be optimistic about the future. Bad things happen and human progress continues to march on.